Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How was your week?
Oh, it was good. I mean, um, it was tricky in a lot of sectors. Just some mixed flow and things, but the main deal I had was crypto going up, solar going down, and that really was enough to have a good week. So, just kind of sticking with the most definitive sector looks because otherwise it's kind of like indecision and down is sort of what's happening. You'll see some SaaS stocks move up 2-3%, give it right back, and then drop. That's been the that's been the pattern, and it matches what we thought might happen with SPY too. So just staying mindful of that. It's the biggest key right now.
Yeah, I did pretty good to start the week, with the usual suspects. Actually, one of my biggest winners was a penny one at MTC, which I'm surprised still hasn't halted. It's been 4 days now, and it's had kind of a similar action. One of the ones where
Yeah,
you never would. I have to lead with that. You never would. You never should. But I should have kept a lot of that, or a chunk of it,
yeah,
because it just hasn't stopped. But you learn. You just get on base on those kind of plays. You just take your money over and over again on those. Save yourself a lot of stress. Um, yeah, Goose, where's my dollar account at? But and then Tuesday,
yeah,
Tuesday, I mean, it kind of looked shaky. So SQQ was the way to go. It looked like I grabbed a little bit of that. Still holding on to that. So I definitely want to talk to you about that today. Um,
yeah.
and then Wednesday was HUSA from the list. Sold what I had of that. Kind of locked in some stops on everything and just walked away early Wednesday and pretty much didn't trade to the end of the week. I was at the screens, but it just wasn't. It was pretty ugly out there. I mean, it was pretty ugly towards the end of the week, both the combo of volume and price action. So um, I'm still. I think I said it probably to you 3 months ago. Like I'm just trying not to mess up this year, right? That's where I'm at. So smaller,
Yeah,
smaller
yeah.
positioning and not taking too many chances. I mean, I've never closed so many $100 trades in my life. I mean, I just haven't. But I mean, I'm not trying to mess anything up, and I still, to be honest with you, I like trading. I like the action of trading. It's fun. I get that. Um, so yeah, yeah.
Uh,
Protect your neck.
yeah. I'm
Protect your neck.
I'm I've been pretty close to the vest. I had 10 end phase puts at 125p. I sold 8 of them, and then and then it dropped 15% overnight out of nowhere. Well, not out of nowhere. It was because of Solar Edge, which ended up being just a huge win for me. But still, it's like, oh, if I would have kept all 10. I mean, this the scaling out thing is something you always work on. But I think the big point is you got to get some out. I don't care how good the setup is or whatever. You still, you take something in the money, $4 move, like 129 to 125. Uh, I mean, that's good because the thing about options in the money, if it goes back out, that can get that can get dicey really fast unless you have just a ton of time. And the psychology of it kind of messes with you because you're like, oh, it's going to go back to where I just was, and um, so no, I mean, I think anytime I get these like massive wins like this, I really only ever have one or two left. I don't know how people do that differently. I think it just would mess with my mind too much to try to hold stuff to the end as the date comes up.
I hate to sound like a broken record or anything, but the market conditions from on my side dictate that. I mean, if it's a good market, you can hold things positions a little longer. If it's an active
Yeah,
market, but we just haven't. We had that. We maybe had 5 or 6 months of that at the start of the year, but we just haven't really had a super active market in probably close to 3 years. I mean, it's just been so much selling pressure, and it's getting worse. Like the volume's thinning out as we speak, at least in this cycle or quarter or half of the year, however you want to look at it. It's just really getting thin. So you have to know the conditions you're playing in. Like you don't try to hit home runs into a 40-mile-per-hour wind. You just don't. Like that's not what you
Yeah,
do.
yeah, and right, absolutely. And I think people who trade options, I mean, especially people who've taken some losses, which pretty much everybody who trades option has. You start to think, okay, how can I reduce my risk? And one thing people do that actually I don't think reduces your risk is they play expensive stocks further out of the money because so much is going against you at that point, and you're like okay, well I'm not gonna trade $300 positions. I'm gonna trade $100, $80, $50 positions. All that's fine, but you gotta have a mindset that I get to 20, 30% up on this, it's time to get out or it's time to set a stop. If you're trying to turn $50 into $150 over and over again, um, you're just going to take a bunch of losses, and your stop loss, even if you set one up, is going to be lower than the average profit that you're taking, and you'll just slowly bleed out your account. So rather than losing it all in one big trade, you're going to slowly lose it over 3 weeks in 100 trades. So I think you got to just understand, like, you got to find a stock that is close to the money at the price you want to pay, whether that's $80, $300, $700, whatever it is. You have to be that one or two strikes out. And I think also the other thing people do, you buy more time. Buying more time is never bad, but if you're not going to get a sustained move, then buying that extra time doesn't really make a lot of sense. Example I can give real quick is like Roku. Roku got right back to my line at 60.24. Probably gonna break down from here. Could go to like 52 or something like that. So if you're trying to trade off the 60.24 pivot, unless you're buying time out to 2025 or something like that, just buying a monthly because you can go further out of the money and it be cheaper isn't really gonna work for you. If it's a day trade, a little bounce off the line, a weekly actually has a lot less risk. So that's how much options trading complicates all of this, and it's why I think what you do, you find the best setups you can. You get 80% shares and 20% options, and on those options, you figure out what works for you. People ask me all the time, what strikes you buying, what strikes you buying, what strikes you buying. I can tell you, but I'm trading it in a way that might be different from what you want to do or what you have time for or what your budget is or whatever. So I think the question I'm saying is like, what strike do you want to buy and why, and then we can go from there. That's a much better question. Um, just trying to copy exactly what I do, you know, would be that's fine, but it has to match up to. We got to be in the same ballpark of our goals and scenario and style and timing and all that. So it's just so important to just find your own groove and don't don't just start with a small account and just let it slowly bleed out. That doesn't get you anywhere. Let's learn to trade and focus on that.
Yeah, no, I mean, I'll say the elephant in the room with the options. It's the only way you can hit the home runs consistently
Yeah,
or regularly. I mean, it's hard to hit a home run once a month on share side. It just really is. You have to do some work. So I mean, that's the elephant in the room is they are in the game for the home runs. I mean, not anyone particular, just most people that are in a small account situation. Um, so
yeah,
that's got to get out of your head. You don't start the game with that. And I would just set up like sure. I mean, if I was under at 1K, I would legit be like, I'm taking my base hits until I get to 5, 10, 15, 20. We just set those milestones on the way, and I'd try to keep the account the same or the trading size the same so the account can grow. So one mistake doesn't, set me back 4 months. I mean, because it's gonna compound. I mean, you're gonna start out. I hate to say it, but if you like look at charts and stuff, it's gonna start out with $1,000, and maybe by the end of the first year, you don't even make two. That's just kind of how it is.
Yeah,
But eventually, that maybe the third year you don't even make three and a half, but that fourth year you finally come through because you figured out what you're doing and you're at 10, and then it starts to really build. So it's more about putting in the time. I mean, I kind of gave up on just talking people just to play shares and go back to work. That's not super effective
yeah, yeah,
for our whole thing. But man, it's just where I started and what works. So I think you can do that with option size, but you're right. It's all about that style creation.
yeah,
Um, I just see
yeah. And I think
Go ahead.
the I think the worst thing people can do is, the notes I post have a really good win rate. You just do what it says. But the thing is, you have to understand that, like, I'm seeing, okay, this is the flow leading up to today. This is what it's doing in free market. This is the pivot that it's close to. So I'm going to try to trade. I'm just going to grab a put for test of pivot, and then we'll see from there. You can't come back to that 3 hours later and say, oh, it's at the pivot. You know, I'm going to trade this. I mean, you can, but that's not the note I wrote. We're in a different situation. Lots of different stuff can be going on, and so when I see people post like this stock's at a level, this stock's at a level, this stock's at a level. I mean, especially when it's fallen 15% this week to get to that level, and it's a stock we haven't talked about in a long time. I think you got to, in this environment, you have to be really careful about that. So I'm trying to be as precise as I can be, but I think the desire people have to just get into a trade sometimes,
Yes.
just because like a candle hits that line. Let's look at the context. Let's look at the broader context of the market. What's the option flow like right now? What's the TA like
Oh,
right now? I mean, because things
reverse
reach pivots
engineer that.
in different setups.
Reverse engineer
Yeah,
that for me, Pete. When because I'll do it for you too. Uh
yeah.
when a chart you're watching hits a line you have, what's the first three things you do?
Mm-hmm.
What's the first three things you do?
Okay, so
You click buy. Is that the
I
first
look
thing?
at
Click buy, right?
no, no.
Oh,
So I look at flow. I look at what I guess the trajectory it took to. I'm not like a TA guy, but I'll explain it this way. Is it a big aggressive flush to my line? That's actually better than a slow bleed out that kind of taps it, and then it's just gonna fade down further. SMCI did that late in the week. So a big aggressive flush when the market is favorable. Like, so for me, the three things: flow, context, I guess I'd say, and sector slash ETF performance at the time. And then then I'll think about getting in. But for me too, it's also the fourth thing. I'd rather it be a retest. I don't want that first tap of the line. I want to see what happens. And it's either going to bounce off of it, come back and bounce again, or it's going to check down below it. From there, if it consolidates, I'll think about it. But all of this, I'm trying to talk myself out of it when it
yes.
gets to the
Yeah,
line.
prove yourself
That's
wrong.
that's actually
Prove
what I'm trying to
yourself
do.
wrong. Yes.
So yeah,
Yeah, no, I'm
yeah. So that's
100% the
my
same
whole
way.
that's my whole thing. It's not just an alert. Oh, look, it's at the line. Buy it, or even buy a starter. I mean, I don't. You don't need to do that. It's not just gonna take right off and leave you behind usually. So no, you got time.
Yeah, so share side, yeah, I'm saying share side. I guess I got a little more time, but my first thing is I mean, obviously identifying what kind of line is it. Is it an intraday RTL line that I preach about? My auto generated shit. Is it one of my historical lines? Is it some purple line I got from you? I mean, what is the actual relevancy of why I put that line on the chart? That's the first thing I want to know. And then it's sector news. I'll put those together. Like what is it? Why is it moving? What is my overall thesis on it already?
Yeah, and not all lines are the same. I mean, Oxy 5850, like I'll just buy it.
Sure.
I mean, if it like and that's right, buy a monthly, and then yeah, it could dip a little further, go to like 57 or something like that. But we're going on over a year here at these levels, holding up on that one. Yeah, coin, there are lines that are really good. Um, Obviously with the crypto stuff like MSTR, kind of depends on what crypto's doing, but I was pretty adamant at 317.50 and then 334. That this is a good spot to get it, just given what crypto is doing. But then again, that get back to that sector thing, because I'm seeing people mention a level on a sector that's not good at all right now, and it worries me that people are just going to jump in without this process that we're talking about. So as the market's pulling back, yes, stuff's going to hit levels we've seen recently in the past 6 months. But let's just pause for a minute and see what brought it there,
Sure.
and then we'll talk, because pivots go both ways. I mean, especially mine. Mine are on a shorter term things. The best ones are the ones that line up with your system, and I don't even hesitate to say that at all. There's great trades off my local pivots, but if it's not something where you would buy shares, that you know that means something. That means that like you're in a pretty short trade here. So it's extra caution is needed there.
Yeah, definitely. No, I was gonna make that point. Like in a great market, I say it to you all the time. Like we're great in a good market, and we're good in a horrible market, and that's that's just probably the best you're gonna get from anybody. You're not gonna find someone that's great in a good market and great in a bad market. If someone's telling you that, they're fucking lying to you. So
Yeah,
when you
you can't
get
you can't just go short either in a
oh
bad market,
no
because the whole thing
no
about
no
bear markets is that the rallies are just ferocious, right? And they'll just shake you out of anything, no matter how bad the stock's looking. So,
but
um,
but as you were kind of saying, like the best setups right now, and I think they're the best setups to start with anytime, whether it's a good, bad, or indifferent market. Like if you're struggling, that's kind of what you go back to or where you start with are the things that really cross over because we're not trading the same way whatsoever. Um, Not to go back down the
yeah,
road, but like if I'm literally just said at the start of this, I've closed more $100 trades. We all know I trade, five to 1,000 shares usually. I try not to go over 1,500. That ain't even a thing right now,
yeah,
unless it just isn't. Um, but if I'm taking $100 trades, do the math. Just do the simple math. So if you're trading 100 shares, that means you're gonna have to trade 10. You're gonna have to take $10 if you're trading how I'm trading. So expecting
yeah,
to get 50 or $70 out of that trade, right? That's loot. I mean, you're trying to 5 or 7x what I'm doing, and and I know what I'm doing works. I have proof with Pele that it works. So find yourself one, especially if you don't have time, and just learn it and take your time because that's more important. But back to the original point, the crossover stuff. I'll say the name out loud right now. Coin? Are you kidding me? Like we have that thing on
yeah,
lock, and those are the best setups. I mean, I wouldn't trade coin right now unless it didn't feel safe. But it feels safe because
yeah.
we have so much put into it that we trust those levels, and we can see things kind of before they happen at this point in time. Reminds me a lot of Mara
Uh,
at the beginning of the year, to be honest, where it just had the crossover that was too good.
yeah, no, absolutely. And and here's the option side with as stocks approach some of these levels that match up. Um, I like to play a small option position to a line, whether it's kind of whether it's up or down, and because these lines they like to be tested. So it's just got to give me just enough room for that trade to be worth it, and
Yes.
that's going to be depending on the stock, 1 to 4%, and that depends on if it's low IV, BA or something like that. 1.5%. That's going to be a good trade. 1% on coin isn't really going to do much for you on the option side. So those trades are my best trades right now, and it's been puts just because of the market that we're in. But I'm like, okay, I'm gonna look for SMCI to test 280, and it closed the week at 250. So
Yeah.
and I didn't hold one put for that, but like there were three different times I just bought a put, and it took just straight down most of the day. So that those are some kind of unexpected triples that I've been hitting, and yeah, I could buy more than one contract, but I'm playing to a level, and I'm not looking to really do that. It's just it so happens that stuff's breaking down below the levels and they aren't holding, which is also a lesson of why I keep saying don't just hit a pivot and just slam buy. Let's see how it reacts first, and then we'll go from there.
I got one kind of question um, before we kind of move on to some numbers and stuff. But
Yeah.
am I wrong that the best option plays, and this is gonna be hard for you to say yes, so be honest, are
Okay.
are my early TA reads because there's no option activity yet, so you're gonna get a super entry on those things. But picking winners and losers, night, right? Night's a good example,
Yeah.
is the key there. But the best option, the safest risk reward options are my early TA plays. That's where you would find them, not in your notes, because you read option flow, so the money's already moving
Yeah.
there. Correct? Am I wrong in that assessment,
Yes.
or
No. No. You're right. So the by best,
like risk reward ratio?
yes. Yeah, I think so. I think the you just have to if because the flow's not there yet. It just you need extra time. That cuts the profit a bit, but your risk is so low
But if you
that
can come
that
up
that
with a
kind of
short,
makes
if
up
you
for
can
it.
come up with a shorter term thesis, I mean that one was ER, so I wouldn't do that every time. But if you have like a shorter
Yeah,
term thesis, um, that one's Tesla's
yeah,
current.
no,
Tesla's currently downside, so I don't want to use that. But if I could think of something good right
yeah,
now, if I could think of something like, man, the
yeah,
news is going
yeah.
to be good here, like some LNG stuff right now. If like we just knew, like, hey, like, and the charts look good, but the flow wasn't there. That's where the line up is. I mean, everything else checks, but the what you usually start with, that's what I'm kind of getting at there.
Yeah, no, I'm with you. I think so. I think so. And we had people the KNX who they got in early, but then JB Hunt had their earnings, which were bad, brought it down, but
Never went away.
its setup never changed. So that's why I was saying, the time, buying the time is so important. And I think you get in something early, you do well, um, re-enter on a dip if the thesis is the same, because you already won on it. So that new position is going to be cheaper or maybe free, and and then you can just hold through that upcoming catalyst, and kind of go from there.
Oh, it's two
So yeah,
trades. Two trades if you're early, P. That should be a thing. Two trades if you're early,
yeah,
maybe three.
yeah,
It's not one
absolutely,
trade. I mean, you want to hit that multiple times and like learn the setup along the way on that thing, um,
yeah,
or go like 50 deep, like Pele has with Mullen, like Pele has with Nvax. Just keep trading that thing until it doesn't pay you back. Um, or you with Coin, Oxy.
yeah, yeah.
I mean, I would
Yeah,
hate.
and I think too the people who try to read flow on Twitter don't end up doing it very long because they don't have they don't have success with it, and the reason is that a lot of times you are late if you're just looking for that big huge volume spike. So like for me, it's trickle then a flood, and it's finding out which trickles of option flow are significant, and you see that when you read between the lines in my grades sometimes. Like that's what I'm seeing. It's like I can see something taking shape here. By the time all the big money is in a lot of this stuff, you're already pretty late, and you're not going to you're going to scout that. You're not going to get a full position. So I kind of look for them to line things up. It's how I've been early on gold. It's what happened with oil, the first time. It's what happened with crypto. Like, that kind of read, a little more nuance to it than just seeing, $1 million orders piling in on
Yeah.
Nvidia or something. So that kind of flow, the most obvious stuff, you got to look at what else is going on, because it's usually a lot more complicated. But quiet stocks that get some attention, that's what I try to get in, and then they get more attention, and then that's what carries us up when we're already in. That's what we're after.
Exactly. No, that works on both sides because that works for me.
Yeah.
Let's hop into SPY a little bit.
Yeah.
We got. Let me zoom in on this weekly guy right here. So we had a little bit more bottom. Um, we both were 425s and some change last week, and then the top. I was pretty darn close on the top. You weren't as high. You had a little tighter range. Um, so I'm probably gonna take the dub here since I haven't got one in a while. Um, I've also kind of like noticed because I've been looking back. We're just not. I don't want to say not good, but I'm gonna just say not good. We're not good at like keeping it together for the thesis together for an extended period. The 3 day 3 week rule right now. Because if you look like a week back, we still have the same bottom. So I think we're just gonna stick here for a while, and we're trying to get out of this hole. Um,
Yeah.
like last week, like I guess we're just not going to come here and say I'm going to say it today, but we're just not going to come here and say, you know what, it's probably going to be a sideways shit week until these people on the hill figure it out, or those people over there stop dropping bombs. Expect low volume. There'll be stuff to trade, but you got to be kind of diligent in what you're trading and take profit. Don't be greedy. So I'm going to say that this week.
Yeah.
Because I mean that's really what it's been probably the last three as I look at these P. The top's kind of established here, a couple bucks. Um, we're not going over this spot. It looks like this
Yeah.
this this 438, which I said 439. I was hopeful last week that we would push out, but that downward pressure, those downward numbers you were talking about, um, my 1 year volume P number, I think those are definitely in coming up. They're one or two lights away, one or two stoplights away down the street. That's how I see it.
Yeah. No, I have a similar read, and it's just all about
Time.
the SPY put positioning, and December 400p is the one now. Um, November 17th 400p a little bit too, but that December one really kind of got has my attention.
Is it like
If we're gonna
early,
break
early
down,
in the month?
it's the middle of the month, so it's
Okay.
12/15.
I mean, there's got to be a flow set up somewhere in there that they don't elect a speaker before the shutdown thing because we only kick the can down the street 45 days, and then that becomes an issue. Like a
Yeah.
combined, they don't have enough time to figure out both, basically. Um,
Right.
for I mean a week or two or three or whatever, but it's looking worse than it did the first time they kicked the can down the street, in my opinion. Um, because
Yes.
but because we have the speaker problem.
And I don't know how that gets resolved, because they had a guy, they do a public vote and he gets a lot of the vote, then they do a secret one and he doesn't even get half of the votes. So
Yeah,
there's a big division within Republicans right now for sure.
Well, just all together there is, and it's just uncertainty there. And
Yeah.
then obviously the bombs being dropped over there is not helping us. Us mobilizing a little bit doesn't help us. It should help a certain sector. I know we're both liking this week, but
Yeah.
overall, I don't think your regulars do too well, especially in the face of earnings season. Um, it was interesting
Yeah.
the
Real
digestion of
quick
that
on
last week. Yeah. Go.
Yeah. So we talked about, it was about like Netflix and Tesla, right? And
Yep.
our big warning was, if Netflix is bad, kind of run away. Netflix was excellent, and they held their gains. 400 is a big number right now. Maybe it's a psych level or whatever, but it's bounced off that a few times. And then Tesla was the disaster, and it sort of makes me think that we're going to get like some big moves in earnings for a lot of people, and it's going to be big winners and big losers. And I mean, you can look at flow or whatever, but there's if it's going to be anything like Netflix and Tesla, it's kind of like a follow through of what's been happening. Like if what the company's been doing has been working, you see more of that. So that's why I think Meta might do well. If they're struggling and they've been telling you they're struggling, and then that could continue. So like Enphase, Tesla, and so that's going to be there's going to be some really good trades for earnings. Maybe not through it, but afterwards, I think is safer. But that's kind of what I'm looking for. But I don't think the market's going to be able to make up its mind. I don't think we're going to have the majority earnings be good or the majority of earnings be bad. It's just rewards and punishments going to be going to be doled out according to criteria that we're already pretty familiar with. If Netflix is any kind of barometer.
So I seen this graph, and I think it was the last like 8 quarters. It wasn't a graph. It was a 2 column thing. It was just 2 columns, and it was about the overall market earnings and the last like 8 quarters. And one side was earnings per share, beats or misses, and the other side was revenue, like increase. And the ESP beats was in between, let's say upper 60s to probably upper 70s, but there was an 80 in there too. So
Yeah.
pretty good beats across the board, right? But that revenue line, boy, that was not looking good. It was down in the
Right.
20s and for the most parts, and it was just horrible. I mean, there was a couple of abnormality 40s in there, but um, yeah, that's what it's about. So I mean, they're guiding low, but it's more about the money on the back end. So that bottom line's been more important. Like really getting into. I mean, if the least you could do is look at like the last 4 quarters of revenue and see what they got now. But if
Yeah.
if company was at, just to keep round numbers, 500 million revenue 4 quarters ago, and they're doing 125 now, that's a day trade. Just telling you, that's a day trade. And it's something you want to make sure you have extra catalyst on, because I mean they're bleeding out. And that's a lot of revenue just because they hit their earnings per share. So that's what I'm looking for. Harder to do in the bigger names because they have so many components that make money. One might be like what was I looking at? One of the banks. It was just impossible to figure out like where they were making or losing money because there's just too many moving components. Um,
Yeah.
so you kind of want to like be mindful of that. I wouldn't try to dissect Disney, but Tesla's pretty damn easy. Um, that's probably a bad example, but I think they're super relevant. You just got to know what you're looking at with the earnings. And I hope you watched Read the Room because I said the same thing. I said you trade earnings before or after. Like through it is just a bad idea right now, especially for you option guys that can't get out.
Yeah. And there's just so much, the Greeks that are against you through earnings. And also, if like if you're a bear with Mike, I think soft earnings this week, I would just kind of clear out, because if those earnings are good, the Qs and SPY are going to move higher and significantly so. They just might not hold it. That's the whole thing. Like they probably won't hold it, but that would be the time to re-enter puts again, because a lot of the stuff that's bad with tech right now is good for Microsoft because they're cannibalizing some of the smaller SaaS names. That's the big thing happening with me. And now that they're talking about making their own chips, I think even more so. And we talked about this last week that this is what tech does. It's kind of like smaller companies take chances, have good ideas, and the big dogs just scoop them up. So that's going to be a big story going forward there too.
Well, I gotta go first here because I'm claiming victory last week.
Yeah,
So
yeah,
428, 42 on the top. Um, I'm gonna just talk myself in that 430 is gonna be resistance here. Again, like I said, leading in this, it's real hard for us to come here and say that, but I really think that's market conditions, especially after how big of a candle we got. I think we're staying inside that for the most part. Um, After the flush on Monday morning. So that's my bottom number.
yeah.
I gotta pick here, um, and I'm gonna go for. I want to say 17, but I don't think I think the number's too low. So I'm gonna go for 1802. So 428 on the top. I still have a $10 range. It's a huge range, but it's inside this last week.
Very good. I'm going to go 429
He didn't do it. That was my one question.
11.
Was you going into the 430s or not?
I'm tempted because I am pretty bullish on Microsoft, but I think it's a question of where we come from, and so I think we're going down early. So that's why I'm gonna put the top there. All right, so then downside, um, 417.92.
He did it. All right. So we're pretty tight there, P. We're
Yeah,
pretty
yeah.
straddled there. Um,
Well, um, here's kind of my dilemma with the flow. The 400p, for 12.15, got a lot of time, work our way down there. But the 420p for 11.17, the fact that 40,000 volume on that one on Friday, that's I'm going to watch and see if that volume keeps kicking up, because if we start to get to that, it's this 380p for 12.15 that's starting to pop up. And this is all just seems a little bit outlandish to me, but
yeah,
I don't ignore what they're telling me. But the thing is, they can make money off of that contract without us even getting close to that,
for
because
sure.
there's going to be a lot of demand for it if we start to get to 400. So, and I'm still in a scenario where the top 15 contracts are all puts, and they're all mostly ask side. There aren't a lot of sold puts happening to really um, defend much of anything. So any floor we have around here is TA based, which leads to my next question. So the a lot of people making a big deal out of by closing, I think below the 200 SMA on the week. Is that correct?
Hold on, let me pull up the 200. I gotta change some stuff real quick, but I can let you know.
Yeah.
Studies. Okay, keep going. What are they saying?
Well, that quickly leads to whatever 5% down from there to 13% down from there, and they're calling up things from like decades ago or whatever. So basically, they're just saying that like we're going to see some significant downside
What's the
from
numbers
here, and
again?
that quote
200, the 200 or the 50? Sorry,
200.
just the 200. Okay, I'll just change one.
Yeah,
Okay, okay. We're gonna see significant downside because of that.
because we closed below that average, and I'm wondering what is your outlook on that? Like a weekly candle or a daily candle closes below this line. Like, does that factor into what you think
We're not
how it's
below.
going to react after that?
simple. We're not below that line. Here, let me put them both there. So, do you got a chart? You have a chart they post?
Yeah, I'm looking it up right now.
The 200 is at like 390. The 50's
The
close.
SPY on the okay, it's a daily. I'm sorry, it's a daily.
Oh,
So the
I don't know.
SPY on the
No, that's
daily
fine. That's
time
fine.
frame,
That's fine. Hold on, the switch.
when viewed on an unadjusted
There you
chart,
go. Right there. Yep, right here.
touched. Yeah,
Yep.
yeah,
Yeah, it just did that like a
gotcha.
month ago too. So what's your point?
Well, it's not my point; it's their point.
No, what's their
But
point?
yeah,
What's their no?
so their
Sorry,
point, their their point is that like
I'm waiting
that
for.
it's extremely it's bearish that happened, and we break down from here. Um,
Why didn't it
my
last?
my
Why didn't
take
it
on
last? Hold on. Why didn't it last time?
my take is that not only well, I didn't know that it did last time, but my take is that these big moving averages like this, that's where the zero DTE SPX stuff and the moves in futures happens. The whole thing has been to defend these big levels, and and then we either see a rally from that, or we kind of go sideways, we go back up, we move down. Like, it takes time to break down a major level. So I think you got to be very careful shorting it. You're shorting the whole essentially,
Okay, well,
and that can bite you.
let's historically go like, oh, this is the dumbest thing I've ever seen in my life. I'm sorry. Let's just go historically.
Yeah.
So, where were these people last November when we probably lived under the 200 EMA, right? And then it flipped the 50.
Mm-hmm.
This cross right here. So we went under it
Yeah.
again. After this cross right here is the most important thing if you're going to take the 200 into an equation on a day chart at all. Like,
Mm-hmm.
it broke down. It gave you one flush after the cross, and it's hadn't even really came close in almost a year. And we pull back. We pull back to the 200 for a month. That's healthy. Like, I don't know how you see that anything but healthy from a TA side. What
Yeah.
breaking down, like even breaking down to my number, P. I've talked about this number how long? 411, right? That's still a
Mm-hmm.
healthy shelf. You're not changing even the trend until you get down to that 380 level. You're at that, actually probably 375 before I'll say the trend's actually changed on this. So anything in there, we have
Yeah.
gotten overextended in the first year. If anyone that doesn't see that is just they're they're way too narrow. Um, Healthy pullback probably should have been a little bit more before we broke out to that first 460 test, but everyone has that in their head now, including me. How many times did I ask you about 460? I mean,
Yeah.
it was almost a solid month. So this consolidation here, I mean, if you just go off the SPY chart, what if we do this here? What this was 11.7 to 3. That's 4 months. What if we do that? But it's up here at 4,
Yeah.
410 to 430. That's completely flipping healthy. That's not sky is falling. It's just a narrow mind-sided view. And they're using anything that confirms their bias instead of trying to do what you said earlier, which is a great way to wrap this one up. You have to try to prove yourself wrong.
Yeah.
And they're not. They're finding something that confirms their bias. Like, I need to find something today because if the event happens tomorrow, I want to say that's because of it. That's all it is. There's very little work into that besides, again, kind of always to have the sky is falling in your pocket to show people, or that we're going to go to the moon. It just depends on your side of the coin.
Yeah. Well said. But yeah, so that's been the big narrative out there I've seen. So yeah, that's helpful to
I hate people
hear you
using
walk through it.
TA 2A. Well, it's just like, like kind of like using something to sell your story that's like, oh, it's not snake oil, but it's pretty close. There's probably a word for that for you. You have it. There's probably 1,000 stories
Yeah.
you could tell me that show that, but it's one of them brothers. It's like not Cain and Abel because they'd be killing each other, but it's one of those things where you just kind of use a situation to sell a story that it's not really relevant, right? Like Chicken Little or
Yeah.
something. I
Yeah.
don't know. Is
Absolutely.
that Chicken Little? I don't know.
Right.
Fucking know.
Yeah. Sky is falling. Yeah.
Yeah.
No. So I think this is why like to me, there's plenty of downside catalysts that can break this down. But I just seen so much over the past year that you get to these significant averages, and that's where the buyers step in. And the buyers this week, might have a reason if all these earnings come out positive for the big guys. So that's why I just would be really careful shorting, and I continue to say it like I only short stuff where there's a pivot below, and we're going to go test it. If it wants to break down from there, hey, I'll take my 600% on SMCI. That was nice. That was fun. But the whole trade was to just test the line, and it just happened to just crash right through it. But yeah, I'd be very careful with going into a bearish thesis just because we're below some little wavy line on the chart. It's not enough.
Definitely. And I'm gonna this time around I'm Marshawn Lynch on this one. I'm gonna keep saying it over and 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 over until y'all really get it in your head. That's where we're at. But September to January, charts are gonna find a new low in this cycle. It's not gonna be the last October low, but it's gonna find a new low on the chart. Be ready. Can't tell you
Yeah.
when. It's
And
going to be.
the ones that do the October low, we're going to go ahead and just mark them off our list
Yes,
because
sir.
they're
No, no. Hey,
they're in big
hey.
trouble.
The
Yeah,
ones that hit the January 1st low, I ain't even letting
yeah,
them get
yeah,
that far. I ain't even letting them get that far.
yeah,
So as that relates to SPY, if SPY gets down to 377, come talk to me.
yeah,
You ready to get to work, P?
yeah. Let's do it.
Let's do it.